My stock evaluation tricks: how to find a great investment in 60 minutes or less. Hello everyone, my name is Tony and today I'll share a handy trick with you, my way of finding great investment targets in just 60 minutes or less. Now, please keep in mind that this isn't a detailed guide where I explain all of these things you need to do before you invest. I cover those in my eBooks and future courses. Instead, I will give you a short version of my initial evaluation process that helps me decide if a stock is worth actually researching. Before we jump right in, I want to throw in a quick reminder to like and share the video if you enjoy my content and want to see our community grow. Every little bit helps. You know how I always tell you that long-term investments need a lot of research. I advise about how you should always spend at least one afternoon's worth of time reading and looking at reports before giving a company your hard-earned cash. If that sounds like a lot of time and effort, that's because it is. But if you have a career or business to take care of, on the top of that, spending so much energy on every stock that seems interesting isn't exactly sustainable in the long run. You may manage at first, but eventually you'll burn yourself out. Or even worse, you risk overlooking some crucial detail and making a costly mistakes. To avoid this, I have developed a simple but really effective method that allows me to find good stocks in as little as 60 minutes. And today I'll tell you all about it. I'd like to share this info with you. So we are going to look at it. All starts with an idea. As always, you need some sort of inspiration. It could be an ad, a product you see at the store, or even something you see in a TV show. Let's say you see a new food brand at your local store, and not just that, but you see people buying it and being excited about it because it's a healthy food brand. So you go online and look it up. You open up Google and you check to see if this is a public company first. This is the first big turning point, because if you are not dealing with a public company, you need some other idea. Now, for the sake of our example, we are going to assume that our company we choose is a public company. This means you can invest in. You can go on your account and start buying shares immediately. Oh, well, you could do that, but you aren't going to blindly rush into it. Yes, instead, you are going to move on to the next step of the procedure. You look at the business and its stats. Luckily, you already know a couple of things about this business. Since it's a product that you only heard about recently, then it's probably not very old. And since you haven't noticed any massive marketing campaigns about it just yet, it probably comes from a company that is still growing. There are two things you can do here. Have a look at the financial stats, which is what most people watch my stock analysis videos for, or look at the business itself. I suggest that you begin by looking at the business before diving into the financial stats and the balance sheets, because, as I often say, you should never give your money to a company you don't believe in, no matter how great their financials look. If the business doesn't look promising over the long run, it's probably not a good long-term investment. So, you want to look for as much information as possible: news, interviews, media coverage, company history, product releases, and so on. But don't bury yourself in this just yet. Instead, quickly skim through the information and save the links in a notepad or some type of spreadsheet. Set yourself limit on maybe 20 to 30 minutes for this part. If you decide that you like the business, you can return to your spreadsheets later and read everything in detail. Using the information, you'll be able to form an understanding of the business. Now you can go and look at how their products are doing in their field. Look at the category and grow year to year. You want at least a 15-20% growth year to year. Do they have that? Great. This means you can move on to the next step. The financials. Here you want to focus on a couple of things. Number 1, balance sheet. Number 2, cash and cash equivalents and long-term investments. Number 3, short and long-term debt. Number 4, income statement. Number 5, PE ratio. Number 6, current ratio. Balance sheet. A solid balance sheet means that the company is likely to recover from hiccups or unexpected roadblocks. Cash versus debt. Now, sum up everything in point 2 and compare it to point 3. You are looking for at least 2-to-1 ratio. Great is going to be 3-to-1 ratio. The more cash they have versus debt, the safer the company is. And that's exactly what you want from a long-term investment: safety and stability. Income statement. For the income statement, only focus on the last 3 years. You are looking at revenues and profits. Ideally, the company will be demonstrating steady growth in both categories. But a few minor hiccups here and there don't automatically make it a bad investment. It just means more research to figure it out what it happens and why it happens. PE ratio. Usually, I am for businesses with a PE ratio under 20. The only exception here are the fast-growing companies, where I can make an exception. For example, Amazon and Shopify. Of course, there is also a limit to this, and you have to set it for yourself. Can be above 50, you're never going to invest, or above 100, you're never going to invest. But again, you need to bear in mind for the high growth companies. Now, the current ratio. In the balance sheet, you can easily grab the total current assets and divide them on total current liabilities. And if you've got a ratio above 1, this is a good company to invest. Congratulations, you just found a company that deserves a full research session. Now is the time to go back to your list of information, articles, presentations, and interviews, and conference calls, and get digging. And even if it turns out that now is not the best time to invest, you should definitely keep an eye on it and keep it on your watch list. If you want to learn how to approach for more detailed research and see the entire process broken down step by step, I suggest you check out my investing eBooks, as well my future courses. Just subscribe to my platform, Lifestyle Tips by Antoaneta. I'm just preparing a quite few investing courses, and I'm sure that you can really get a lot of benefits from it. So, thank you for being with me today, and I really hope that you like my videos and my short guide and some of my tricks how to find a stock in 60 minutes. If you have any questions about this method, ideas about future videos, or if you'd like to cover a specific company, let me know in the comment section below. And of course, don't forget to give this video a thumbs up and share with your friends. And thank you for being with me today, and until next time, stay very motivated. I'll see you soon.